Bryan Gaiser is an investment advisor representative of Advisory Alpha LLC, an SEC-registered investment advisor. All opinions expressed by Bryan Gaiser are solely his own opinions and do not reflect the opinions of Advisory Alpha. This recording is for informational purposes only and should not be relied upon for investment decisions. Investment advisory and financial planning services offered through Advisory Alpha LLC, a registered investment advisor. Insurance, coaching, and educational services offered through Gaiser Financial Group. Gaiser Financial Group is a separate and unaffiliated entity of Advisory Alpha LLC. While tax and legal services may be discussed in the general course of financial and investment planning, Advisory Alpha does not provide tax or legal services. Please consult with your tax or legal professional prior to making decisions related to these issues. This material is not endorsed or approved by the Social Security Office or any other government agency. An annuity is a long-term financial product designed largely for asset accumulation and retirement needs. All guarantees are backed by the claims-paying ability of the issuing insurance company. All opinions expressed by externally cited sources are solely their own opinions and do not reflect the opinions of Advisory Alpha. This is for informational purposes only and should not be relied upon for investment decisions. The case studies presented reflects the specific circumstances of one client and should not be considered a guarantee that another client or potential client may experience the same or certain level of results. This is for informational purposes only and should not be construed as investment recommendations or solicitation. Names have been changed to protect the anonymity of clients and are not testimonials in nature. Learn, grow, and take charge of your retirement. This is the Wealth Thru Wisdom podcast with financial advisor Bryan Gaiser, founder of Gaiser Financial Group.
You know, we spend a lot of time inside keeping ourselves warm, especially this past week. You and I were talking off mic, coming and driving into work. It's 20 degrees outside.
Makes you appreciate the next, the seasons.
That's it. When the holiday...
Winter is there to make you appreciate.
Would spring be as sweet if we didn't have winter to wait our way through? I joke with my husband, though, because I love flowers. And I say, once the Christmas tree is packed up, I just sit around and wait for peony season to hit. So hopefully you're keeping warm. And actually, it's a great time of year, though, for us to be, like I was saying, the financial junk drawer, the cleaning out. A lot of people do clean out in winter, and a lot of people need some cleaning out for their finances as well. Bryan, I know you know firsthand.
Yeah, I mean, what we're talking about today, I think, which is important. I mean, we're in a time, the stock market is rambling. Yeah. A lot of people are nervous about what's coming down the pipe.
It's so complex.
I mean, I'm like, well, that means you probably have too much in the market.
Right. If you're nervous, you've got too much risk. Okay.
Or you don't understand it. And the majority of the people that come in don't really understand. Here's my portfolio. Here's how it's done. Don't understand these buckets. Because when you look at your portfolio, you got to look over to the left too, and that's your money that you're not putting high risk on, right? You got your general savings account. How built up is your savings account? How much money do you have saved for, we need a year's worth of living expenses. X, Y, Z has happened. You get what I mean?
Yeah.
And so you probably don't have that side of your ledger correct. And it's really getting your side of the money that's, you're not trying to make money. You make as much interest as you can, but it's not about making money.
Right.
It's about preserving. Does that make sense?
Yes, preservation and income. Mm-hmm.
Yeah, because you can't time the market.
No,
last year the market was going into recession, but it never did.
Right.
And now it's going into a recession this year. That's for sure. They said that last year.
We're saying this with air quotes if you're listening to us on PTI this morning.
Yes.
But economic talking heads are saying.
I'm being facetious is what I am. It's just like, I have no idea if it's going in recession, and neither do you.
Nobody does.
Neither does Warren Buffett.
That's
you
right.
know what I mean?
That's right.
And if he doesn't know, we don't know.
If anything, but they call him the Oracle of Omaha, and even he can't say.
It's about taking winnings off the table. It's about being smart. It's about look at your portfolio. It's about dividing it properly. Hey, I have a 5-year bucket inside my market money. I have a 7-year bucket and a 10-year bucket.
Yeah.
Well, there's a reason they're called that. It's not about timing the market. It's time in the market. Right. And being smart, reallocating. I'm a big fan of dividends, especially if you're retired. Can you contribute to your IRA? Well, it contributes for you. So really what it boils down to is, do you be cautious? Well, you should have been cautious when you put it together. And cautious means, do I have enough money on the sidelines that I'll be good for a year or two? Can I draw my dividends and still be fine? All of these kind of variables you need to be asking. The only reason you're nervous is the uncertainty.
Right.
Well, guess what? The market will always have some unknown in it. And if you can't wait out the unknown, then you've got too much money in the market. So I would look at it from that standpoint. Most advisors right now see the fundamentals are looking really good. I mean, we got a heck of a consumer market. We've a lot of consumer spending still going on, which fueled the market. Now we own Venezuela. I'm just kidding, but but it does kind of that does take the China-Russia relationship out of the hemisphere. So there is pluses and minus. I mean, going forward, that's such a big thing that's hard for all of us to think about. But from that standpoint, from a standpoint of security, it might be a good thing. Right. But the bottom line is it's also going to inflate. We're going to have another relationship with a group that's going to be buying from us once again. So, I mean, you just got to look at it from a worldly standpoint, whether you have control of what happens or what doesn't happen, but you don't have control of the market. And you got to get that in your mind. But the big thing is fundamentals, corporate earnings are strong, inflation's down. All the numbers are looking really good. And I think that scares people more than anything, Heather. Okay. I really do. I think it truly scares people more, like, man, things are so good, something's bound to happen. 100 years, only 4 times has the market gone up 3 years in a row and then not pull back. Really, it's more of an average, because if you take from 2009 to the present, only in 18 and 22 did the market have a negative. And when I say market, I mean S&P. It only had a negative those 2 years for the whole year. So that's not 3 out of 4. Right. That's a pretty good little run there, but your first decade was an unusual decade in 2000s also that people got to think about. But I think the way to beat it is this, as far as, take this off the table and your stress level off the table, is if you did kind of look at your portfolio that's market oriented, just the way I have a client, and what he does is he looks at it from the way I've basically taught him. 5 year, 7 year, 10 year. We got 5 years, 7 year, 10 years worth of market money. Does that mean in 5 years you're going to be up? No one knows. If you're really concerned about the market, one of the big things you need to do is, like we just talked about, you've got to manage your risk, but you have no control over your risk. You only have control over the way you manage your risk, and make sure there's money in there that has time in the event market does pull back. It can come back in and refeather your cap, if you will. Okay. Folks, if you want to learn to look at your portfolio from a growth standpoint, give us a call, 336-586-5861. We'll show you our way, and then you can compare it amongst what you're doing and say, does that make more sense than what I'm doing right now? And the other thing about it is, I think cautious optimism for this year, because it has ran a good little while. So we really got to think about it. But remember, 22 was an ugly year. And so we've been running ever since 22. 26, does it have a potential pulling down? So does next year, the next year, the next year, and the next year. So don't overthink it. I think, Heather, is really the key here.
Well, easier said than done for folks that are right at the doorstep of retirement, or they have just retired. We have had 3 years up in a row. It's only happened 4 times in the past 100 years where the market is up a 4th year in a row. So the iffiness that is for folks that have reaped all the benefits from the bull run we've been on, now we get to retirement. We just don't want to mess it up. Thank you, great market run. But now we need this money to last. So there is a shift that has to happen as you get closer to retirement. Again, if you have questions about your investments, if you're realizing that maybe your risk is too high and that's what makes you nervous, Bryan and his team here for you, 336-586-5861. So how do you help folks adjust as they need?
It really just boils down to, we're going to look at, here's your money in the market, here's your money out, here's alternatives to that money in the market, whether it's fixed interest, whether it's fixed interest that you're in, whether it's system, it's all about how much cash do you have on the sidelines. You've got to make yourself comfortable. You'll be okay for 1 or 2 years, right? Got to make yourself comfortable, most likely. Okay. And what I mean by that is, I don't need a dime of my money market money. Okay. Of my market money. I've got this much in money market. I got this much in, fixed accounts that are, that I turn over CDs, whatever it may be. I've got enough. The next couple of years, I'll be fine. The other thing, if you took care of your income, especially in retirement right out the gate. Yeah. So now you got your Social Securities, maybe you have a pension, maybe you've created a pension. As long as you have surplus income in retirement and you're able to continue to invest in yourself, you haven't lost what you were doing when you were working. What I mean by that is, I have excess money and I'm going to invest it, and then I can pay all my bills regardless of what the market does. Right. Mm-hmm. But even if you're still working, you got to think about, I got 5 more years to work. What if you get laid off next year? So you got to think about these things. Yeah. And if you do get laid off, what's your alternative plan? Most people don't have one. Oh, no, my company won't. No, I'm good. Everything's strong right now. your company could sell out. The next group doesn't like you, and that's the end of you.
Or you just never know what's going to happen with the economy or the market. And sometimes the company could love you, but layoffs have to happen to save the company. It could be completely unpersonal.
Are you managing your debt? That's kind of what we're talking about. What if you had zero debt? I want people to think about this right now. What if you had zero debt right now? Would that put your mind at a lot more ease? Does that mean go out, pay off your house tomorrow because you got $100,000 in your account? No, not necessarily. But you have the money to pay it off, don't you? So that gives you even a sense of peace, if you will. Folks, 336-586-5861. That's 336-586-5861. I'm on Dolly Madison Road, right off of Friendly, right near Guilford College. Love to sit down with you, do a comparison of what we do and what you're currently doing, or what you're currently not doing.
More importantly,
and
sometimes.
Take a look, right? Yeah. Take a look at it and just say, have you thought about what would happen if I got laid off today, even though I plan to retire in 5 years? Have you thought about these things? And that's really what it boils down to, is asking the right questions of yourself. So the market, you have no idea what it's going to do next year. But if it went down 20%, would you be okay? That's what you need to know.
Okay.
If it went down 20%, because you're technically in a bear market now. If it went down 20%, would I be okay?
Right.
Could I last through this until it pulls itself back together?
Right.
And that's really what it boils down to, Heather.
Okay. Well, Bryan, you and your team here to help folks understand if they would be okay or if they should adjust some things within their plan. Again, that number you're dialing, 336-586-5861.
Thanks for listening to the Wealth Thru Wisdom podcast. To learn more, visit geiserfinancial.com. Bryan Gaiser is an investment advisor representative of Advisory Alpha LLC, an SEC-registered investment advisor. All opinions expressed by Bryan Gaiser are solely his own opinions and do not reflect the opinions of Advisory Alpha. This recording is for informational purposes only and should not be relied upon for investment decisions. Investment advisory and financial planning services offered through Advisory Alpha LLC, a registered investment advisor. Insurance, coaching, and educational services offered through Gaiser Financial Group. Gaiser Financial Group is a separate and unaffiliated entity of Advisory Alpha LLC. While tax and legal services may be discussed in the general course of financial and investment planning, Advisory Alpha does not provide tax or legal services. Please consult with your tax or legal professional prior to making decisions related to these issues. This material is not endorsed or approved by the Social Security Office or any other government agency. An annuity is a long-term financial product designed largely for asset accumulation and retirement needs. All guarantees are backed by the claims-paying ability of the issuing insurance company. All opinions expressed by externally cited sources are solely their own opinions and do not reflect the opinions of Advisory Alpha. This is for informational purposes only and should not be relied upon for investment decisions. The case studies presented reflects the specific circumstances of one client and should not be considered a guarantee that another client or potential client may experience the same or certain level of results. This is for informational purposes only and should not be construed as investment recommendations or solicitation. Names have been changed to protect the anonymity of clients and are not testimonials in nature.